welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our latest offering, What's Hot, a show that focuses on the biggest buzz on the D Street as the West Asia war enters its 7th week and we're into the markets again with selling pressure intensifying because over the weekend we have seen that the US-Iran talks have collapsed and have not reached a deal in Islamabad. There have been also following statements from President Donald Trump on the blockade of the Strait of Hormuz that has led to globally some jitters coming back. We've seen the Dow futures also falling sharply. We've also seen what's happened with the Asia markets this morning, and the Indian markets are also sharply down in trade with all the sectors of the Nifty lower. Nifty Bank lower by 2%. The Nifty also down by nearly 400 points as well. We've seen Sensex wiping out 1,500 points right in the morning trading session. And we're also seeing India VIX spiking by almost 11%, trading now at 20 odd levels at this point in time as well. So the fear is trickling back onto the D Street. So how do you really look at trading this fresh week, which is also going to be a truncated one? Remember, tomorrow is a stock market holiday on account of Ambedkar Jayanti, and therefore tomorrow's Nifty expiry shifts today. So there is also an added on pressure of the weekly expiry as well. So let's try and understand how do we really maneuver all of these aspects into the markets. We're joined by Mr. Nilesh Jain, our expert for the day from Centrum Broking, to share with us a fresh take as far as the markets are concerned. And what do we expect from here on? What strategies to adopt? Is there going to be more downside that we need to be prepared for? Or will the markets be happy to buy this dip as well? Nilesh, good morning. Good to have you with us. Thanks a lot for joining in. Yet again, after last week's of substantial up moves, we are seeing selling pressure return to the D Street because of all the reasons I pointed out. What's your own approach now to the markets, therefore? One, it's an expiry session. Two, it's a truncated week. Three, globally, there are a lot of jitters that are coming in and the markets have fallen today.
Very good afternoon, good morning to you, Sakshi. The morning doesn't seem to be good. It's a truncated week, yes, of course. Today we have a weekly F&O expiry as well. But given this kind of weakness that we have seen today, looks like markets are likely to remain volatile. The VIX have shot up sharply today, and it has surpassed 20 mark once again. And 11% up, that's the cause of concern as of now we have in the market. But looking at the overall product structure, we did see a gap up opening in the previous week when Nifty reclaimed its 21-day moving average, which is now likely to act as immediate support that is placed at 20,250. I think the Nifty is likely to make an attempt to fill this entire gap going forward. So quite possible that we may see Nifty moving towards 23,300, 23,200 on the lower side. But before that, specifically from a today's intraday point of view, I think there could be possibility that we may see a strong rebound on the back of a short covering since we have a weekly F&O expiry. So quite possible that Nifty may witness some bit of a pullback move towards 20,800, 20,850. But having said that, going forward, I believe the pullbacks may get sold into, and quite possible if we see Nifty moving towards 23,300, 23,200, that's the area where one can look to make a fresh entry. So in terms of making fresh entry, I would suggest to wait a bit. Wait for Nifty to move towards 23,300, 23,400 zone. There, the risk and reward will turn favorable for the long position. After a sharp spurt that we saw in the previous week in the Indian equity market, the risk and reward is not favorable to make a fresh entry at the current level. So, better strategy would be to wait for little more correction going forward, and focus should be on stock specific action. On index fund, we expect market to remain volatile.
Okay. Let me also ask you, how are you really looking at the prices of crude oil and the impact there? That's where the pain point is emerging from. Brent crude prices have shot up yet again over $100 a barrel, currently trading at around $102 a barrel. That's led to a sharp fall in the OMCs, and yet again, this space is facing a lot of weakness. What are the challenges here? Are you looking at this as an opportunity, or do you still fear there could be further spike and therefore we go back to square one?
Sakshi, what I feel is that earlier we saw the Brent crude prices move to $120, and since then it has not reached that level in last 1 month. and it is right now oscillating in the broader range of 90 to $120. So that range is still intact. I don't see as of now Brent crude moving beyond $120 on an immediate basis, and we
Hmm.
have multiple hurdles on the upside. So
Hmm.
overall, yes, the prices may remain at the elevated level, but I believe it is likely to consolidate. So nothing to worry on that front. I don't think any major impact would be there. But if you get any opportunities during this correction in this kind of market, that's still a buying opportunity, because I don't see Nifty breaking the recent low that we saw, and quite possible that it may make an attempt to fill the gap, and we may see some selling pressure, but not expecting any major correction.
Okay, got that. In case one has to look at any safe havens, Nilesh, are you spotting any pockets that you would still find the courage to buy at dips?
Well, as far as sectorial point of view is concerned, I believe metal is one particular space where if you get any meaningful decline, because we have already seen a good momentum recently on the back of rising base metal prices, where we have seen copper, zinc, aluminum, all the prices have moved up. So, given this kind of formation, yes, metal will be one space where one can look to make a fresh entry, and another space would be banking. Because see, banking is one particular space where we have seen an underperformance in the previous series, but now the momentum is likely to come back in the banking space, specifically private sector bank, where we are getting more comfort. ICICI Bank, Axis Bank, both the stocks are looking strong.
Mm.
So in terms of playing a contra bet and playing a strong rebound, I think banking should be one space. NBFC will be another space to watch out for. And in terms of playing defensive, I think watch out for insurance space. HDFC Life, after a recent decline, it looks attractive at current level. Watch out for insurance space as a whole. So that is one pocket that needs to be watched out for, and another space that's metal that we are liking.
Okay. Let's also focus on what we started to, put our attention to since last week, and that's the beginning of the earnings as well. We did see how TCS earnings came in. Most of it was in line, but it failed to really pull up the stock higher. Then we're also looking at the other IT names that are all queuing up to report their earnings. This week also, by the end of the week, we'll see big heavyweight banking earnings coming in. HDFC, ICICI Bank will also be coming in. So the entire focus, in fact, all in all, 42 companies will be reporting their earnings in this truncated week as well. So it's going to be a combination of large caps and mid caps that will be in focus, and various sectors that are going to be in focus. So let's try and understand how do we maneuver through this time of earnings and what's our strategy should be there. First up, on the IT space, Nilesh, following TCS earnings, what's your own approach going to be? What are the trends that you are looking at here, and what should be one's approach? Because IT sector has been a big underperformer. We've seen sharp cuts here. And looking at TCS numbers, no big negative surprises there. Give us some hope that the entire sector may be able to pull up, decent showing in an otherwise also very strong quarter. Q4 is always considered to be a strong one for them as well. So how do you approach the IT space?
Right, Sakshi. So we have already seen, sharp decline in the IT space earlier, but this particular series has started on a positive side as far as IT space is concerned. We have seen a very good rebound. The Nifty IT index seems to have found a very good base formation somewhere around 28,000 to 28,500 zone. But right now, in last couple of trading session, specifically after TCS numbers, once again we have seen some bit of selling pressure that is getting emerged in the IT space as a whole. But I feel the major correction is almost done, and from here, any dip can be used as a buying opportunity as far as stock specific picks are concerned. SCL Tech, Tech Mahindra, Wipro are the few stocks within IT space, within large cap space, that can be looked at on declines. But as far as comfort is coming, that is into mid cap and small cap ITs. So watch out for names like Coforge, Persistent, Emphasis. These are the few names where we are getting more comfort, and this decline can be used as a buying opportunity. But overall, from a major, trend reversal perspective, from a positional perspective, I think IT can be one sector that one can look at in terms of adding into the portfolio.
Okay. What about banks? How are you approaching the banks? Let's talk about both private banks as well as the PSU banks. Private banks, what's your thought, especially ahead of HDFC Bank and ICICI Bank numbers? HDFC Bank will be reacting to also for the first time after the recent trouble came to the surface. That's with regards to the change in the top management positions, some of the concerns that were raised as far as of course, ethics and value is concerned, even though the bank came out and clarified, but there was a sharp fall on HDFC Bank shares amidst all of that. So the results will also be coming in. One will be looking at the commentary there too. ICICI Bank will also be reporting their earnings, and therefore the focus is on private sector banks. How are you seeing them positioned currently?
Currently in this market, private sector banks are better placed over the PSU banks. So within
Mm.
private sector bank, our preferred bet continues to remain Axis Bank, ICICI Bank, followed by small banking names like Federal Bank and IDFC First Bank. But yes, HDFC Bank, you mentioned about it. There were some negative news, and we have seen a sharp decline in this particular counter. But looks like good base building is happening in this particular counter. So I feel these are the good levels where one can start looking HDFC Bank as a portfolio bet. The correction seems to be over, but yes, having said that, there could be possibility that we may see some consolidation because the market scenarios are not looking that great. So yes, large cap private sector bank may witness some consolidation, but I think these are the good levels to start accumulating. Axis, ICICI continues to remain our preferred bet, but yes, one can look at HDFC banks as well.
Okay. Let me also ask you on PSU banks. I think in this kind of last couple of weeks, we've actually seen PSU banks getting battered again. After showing us some, healthy uptick over the recent times, we are again seeing this space being battered on an everyday. Wherever we see the markets come under pressure, PSU banks, further fall lower. Today also, it's down by 2.5%, although it's improved from the day's lowest point. But what's your approach here on PSU banks?
As I mentioned, the comfort is into private sector bank over PSU banks because, as you rightly pointed out, once again we have seen a sharp selling pressure at the high level
Yeah.
that is getting. So PSU banks, although we have seen a very good base formation somewhere around 8,000, but yes, there is still some more room left on the upside from the current level. We may see another 200, 300 point correction in Nifty PSU Bank Index, which is right now trading at 8,550. But in terms of making a portfolio bet, I think one can start accumulating in staggered manner, and SBI continues to remain our preferred bet, followed by Can Bank, BOP, and other small PSU banking names like Indian Bank, PNB as well. But not on immediate basis, we expect any V-shaped kind of recovery. Yes, a gradual up move is something that one can look at. One can allocate some portion to the PSU banking space, and we have just mentioned the couple of PSU banks name that we are liking. SBI, PNB, and SBI, CanBank, and BOB continues to remain our preferred bet.
Okay, fair point. Let's get down to understanding some stocks that are in focus today, viewers. Then, and on key stocks, we'll ask Nilesh, his own approach there. Let's talk about retail space first, and Avenue Supermarts is yet again in focus today. Now, MK Broking Firm has put out a base case scenario or a bear case scenario where they believe Avenue Supermart's shares could fall even 50%. Looking forward in their note as far as the price to earnings ratio is concerned. Remember, this comes right after the recent business updates have actually indicated some strong move there. Despite that, there is this brokerage firm that is expecting that the stock could actually fall lower because they have penciled in a forward price to earnings valuation of 70 times. They believe the stock is pricing in a business that DMart needs to become and not what it currently is. And that's what is their major issue at this point in time. Of course, we do know in the last 1.5 years, DMart shares have been under pressure because of intensifying competition in e-commerce space and how that has negatively impacted this retail giant. But let's now see what's going to be in the offing. In the last 1 year, it's been absolutely flat, just about a 3% up move is what we've seen on DMart. But in the last 2 years, it's fallen by 7 odd percent. Your own sense, Nilesh, of course, historically, this has been one of the biggest wealth creators and strong stories for retail investors' portfolios. But last couple of years, we've seen how the stock has reacted. What would you see as your approach to Avenue Supermart right now?
Well, Sakshi, if you can, just pull up last 5 year chart, you can clearly see since August 2021, the stock has not given any return. It's still trading at the same level, which is right now at 4,340. Even you can call it as a zero return in last four and a half year. But now the things have changed. We have seen some bit of improvement from the lower levels in terms of prices of concern. And I feel there could be possibility that stock may continue this positive uptick towards 4,800 to 5,000 as well. Although we are not expecting any major upside, upside is capped somewhere around 5,000 to 5,200. But at current level, I think the sentiment is turning towards positive side, and dip can be used as a buying opportunity, keeping a stop loss below 4,000. On the upside, as mentioned, 4,800 to 5,000 kind of levels can be seen in the near term.
Okay, that's as far as DMart is concerned. Let's also talk about one of the other stocks that's usually tracked a lot by the retail investors, and that's with regards to Eternal as well. Of course, Eternal shares we have seen in the last couple of months has seen some selling pressure. The stock is down 15% in 2026 alone as well. And Goldman Sachs now sees the stock at about 350. So looking at a lot of hopes that are being built onto the stock after the recent correction by Goldman Sachs. So let's try and understand here too, because we were talking about Avenue Supermarts, which was facing a pressure because of these new age firms. Let's try and understand where does name like Zomato stand at this point in time. We've seen a sharp correction. It's trading at around 237 odd levels from over 300, 320 kind of levels that we've seen the stock fall to. But now Goldman Sachs believes, yes, there is a lot of potential to go back. In the last 6 months, 33% of the value has been lost for Zomato. So give me a sense of what should investors do, those who have not had any exposure to Zomato so far. Is this a great price and an entry point? For those who have it and have been holding on for a long time, is this a price to accumulate further stocks, and what would you see as the future trajectory?
Well, Sakshi, on monthly chart, I was looking at the overall setup. It has continued the lower highs and lower low formation for the in fact, for the six consecutive months till last month. This is the first month we are witnessing a strong signs of reversal. So that's a positive sign. Although don't see any V-shaped kind of recovery towards 350, 360 level for the time being. But yes, given the kind of rebound that we have seen from the lower levels, I believe the stock has a potential to test 260, 280 levels in the very short term time frame, and quite possible that it may move towards its 200-day long-term moving average that is placed at 290. So these kind of levels can be expected, and a gradual upside is something that we are expecting in this particular counter. So keeping a stop loss below 220, one can start accumulating this particular counter. If somebody is already holding the long position, can stay put, keep a trailing stop loss at 220. And we are expecting this positive uptick to continue, a gradual upside rather, I would say, towards 260 to 280 in the short term.
Okay, got that. I hope this has helped you out in understanding where does the stock go. But between Swiggy and Zomato, what is your current approach right now, Nilesh?
Swiggy is an avoid. Given the kind of a setup that we have seen, if you can see last 1 year chart, the stocks have topped out, and it has started forming a lower top and lower top formation as well. So overall, it looks like it is heading towards 250, 240 on the lower side. So it's an avoid taking any contra bet till the time it doesn't negate the formation of a lower top and lower bottom, which means it needs to surpass 300 level on the upside. Then only one can look to make a fresh entry. But till then, it's an avoid, and do not buy and do not make any fresh entry at current level.
Okay, Swiggy is an avoid, viewers. At this current point in time, do not make any fresh entry. That's the clear outlook that Nilesh has shared with us. Let's shift focus to another space, and I'm going to be talking about the energy space at large. Of course, crude oil prices, we are talking about the oil and gas space. OMCs are facing pressure today, but the likes of ONGC are celebrating this higher price on crude oil. But at the same time, one has to really look at, is this a no-go area, for investors right now, looking at the continued volatility on the space, or is it giving you some kind of an opportunity to enter? Nilesh, how are you looking at this entire focus globally that governments, countries are now going to be keeping on the energy space, looking at how this current West Asia war has brought up energy security, energy crisis right at the forefront, and how governments will now be planning their policies to eventually secure themselves for any kind of future impact, and what could that mean as an opportunity for retail investors?
Well, indeed, that's the need of an hour. Given this kind of global turmoil we are witnessing amid crude oil prices have surged sharply, so it is important that you should have a decent backup. So first of all, you spoke about energy space. I wanted to highlight that in terms of comfort, in terms of market space where one can look to enter is energy and power. That's the space that is looking attractive at current level. We have already seen a very good momentum in the stocks like Adani Power, Tata Power, Vari Energies, in fact NTPC as well. So all these stocks are good to go at current level, and markets are down, but these stocks have started outperforming. I believe in the short to medium term perspective, power and energies stocks are likely to do well, and the focus should be on this particular space. So out of all these stocks, Tata Power looks positive for 425 to 440 level on the upside, keeping a stop loss below 395. One can make a fresh entry in Tata Power as well. Apart from that, Vari Energy that we have also recommended to our client as well. Very good breakout can be seen on technical front, and this counter looks positive for 3500 to 3700 in the near term. Keeping a stop loss below 3200, Vari Energy is something that one can look for. By any client should be the study. So overall, we are very much constructive on power and energy space, and looks good in this kind of volatile market.
Let me also bring up these two stocks from the renewable energy space, Acme Solar and CleanMax as well, which is now come afresh onto the radar of HSBC, has initiated coverage on these two renewable energy stocks for up to 33% upside that they see. That's why you see Acme Solar up by 5% in a weak session today, and at this point in time CleanMax Enviro also is trading up, and HSBC is the first brokerage house to initiate a coverage on this stock as well. Let's see what can be expected on these two stocks. Do you cover them at all, Nilesh? Would you be able to give an advice, Acme Solar and CleanMax Enviro?
Acme Solar is something that we track because technically we have enough data to comment on, and the setup is also looking positive. So, given the kind of recovery that we have seen after stock forming a good base formation somewhere around 200, it has started moving higher and forming a lower high top and high bottom formation. So overall, positional target in this particular counter somewhere around 310 to 330 can be seen in the near term, keeping a stop loss below 265. One can make a fresh entry, not at current level because already we have seen a spurt of over 5%. So better strategy would be to buy in a staggered manner, wait for a meaningful correction before you make a fresh entry. And apart from that, CleanMax is a recent listing, so I don't have sufficient data to comment on. So that will be an avoid from our side.
Absolutely. Let me also focus on some of the other pockets within the mid and the small caps. Nilesh, what's your focus right now?
Nifty mid cap index. First of all, this index has been one of the outperformer. Even if you compare it with the benchmark indices, mid cap index is nearly 6% away from the previous all-time high. And if you compare it with the small cap, which is down close to 14 to 15%, still at corrected level from the highs. So mid cap have shown an outperformance over benchmark indices like Nifty and Bank Nifty, which is down close to 8 to 9%. So I believe the focus should be on the mid cap space. There could be possibility if we see any sort of stability coming back in the market, mid cap stocks are likely to do well.
Okay, got that. I hope that this has also helped you understand the situation. But let's look at the Nifty back. It's back above 23,700. So signs of the markets seeing a buy on dip at the current levels as well. The Nifty's moved to the high point despite being still low by about 1.4%. But sharp recovery is taking place into the markets as well. Your own sense on this one right now, Nilesh, what would you do now with this recovery that's being seen?
It is something that we did mention at the beginning. So, in line with our expectation, and we still believe that recovery is likely to continue. From an intraday perspective, we have a weekly FN expiry. So, quite possible that we may see a short covering move. So, Nifty is likely to do well today, and the initial knee-jerk impact that we have already seen, I think from here we should see some bit of rebound towards 23,800 to 23,850 kind of levels. I'm expecting Nifty should revisit. And from an intraday perspective, 23,600 is looks like a base formation, and any dip from here should be used as a buying opportunity. So our call on the Nifty should be on buy and decline, and we expect another 100 to 150 point on the upside.
Okay, fair point. I hope that this has also helped you out there. Between, if I have to ask you, Nifty and Nifty Bank, what is your preference right now, Nilesh?
See, right now, from an intraday perspective, I believe Nifty is likely to do well, as well as from a position perspective. I think Nifty may witness an outperformance. We have already seen banks are doing well in the previous week, where the bank Nifty has outperformed the Nifty index. But quite possible that we may see Nifty, witnessing a catch-up play here. And on the upside, 24,000, 24,200 kind of levels we may see on the upside in the April series itself. On the other hand, yes, we are also bullish on the Bank Nifty as well. On the back of a pullback play, we are expecting a move towards 56,000. That's the immediate hurdle. If we see any decisive breakout over 56,000, then the target on the upside will open up for 57,200. That's the long-term 200-day moving average, which is likely to be tested in the short run. So yes, Bank Nifty, Nifty both are looking positive for a pullback play, but comfort is coming right now in the Nifty index.
Okay, all right. We'll leave you at that. Thank you so much, Nilesh, for being with us on the show and helping us out, give your insights on various aspects of the markets right now and a strategy overall as well. Always a pleasure to host you. Thank you so much for being with us.
Thank you, Sakshi.
All right, viewers, we are back at 23,725. It's a downtick of about 322 points. So there is a swift recovery, but still we do see all the indices still trading into the red as far as the sectors are concerned. The major indices along with the broader markets and the sectors too. Let's see whether there are signs that we can see some sectors emerge as the winners. Right now, the least amount of fall can be seen on the pharma index and the broader market. So in case there is some recovery, look out for some kind of green ticks coming in onto these pockets as we move forward to the half time as well. But in case you have any questions about stocks in your portfolio, then ask them away at 12 noon on daily calls. I'll be back for that. So don't forget to tune in for daily calls at 12.